Yeah, good. Well, on a recording mode is activated. All right. So regulatory framework, that's a topic we have for tonight. So let's discuss basically what are the sources of regulations. Regulation simply means that those set of rules that guide us in our professions, right? So first of all, let's discuss what are the sources of those regulations. That is, where are those regulations derived from? So there are various sources of regulation, right? There are various sources of regulation. The first one is IFRS, IFRS or IAS. That's number one sources of what? Regulation. So another one is your local law. That is in Nigeria now we have CAMA. So we also have some sources of regulations from CAMA. So for example, in accounting profession that we operate in Nigeria, we are currently governed by the provision of CAMA, that is the Complaint and Allied Matter Act. Okay, we are currently governed by that provisions of CAMA, and apart from CAMAs too, we are also governed by the provisions of IFRS and all the IAS. So those are the sources of regulations that we have. Then the third one, I've listed two. The first one is CAMA. CAMA is applicable to every entity in Nigeria, whether big or whether small or anywhere you are under CAMA. Then the second one is your IFRS or your IAS. Those are also the second source of regulation. Then the third sources of regulation is for those entities that are listed on stock exchange. That is, they follow the provision of SEC, that's Security and Exchange Commission. So that's for listed entities, they follow all these various rules. E.g., those that operate in the banks, they follow BOFIA, that is the Bank and Other Financial Institution Act, right? Then those that operate under the insurance sector, they follow what is referred to as a NICOM Act, that is Nigeria Insurance Commission. So those are some of the third sources. So in summary now, the sources of regulations are divided into three. The first one is your IFRS or IAS. The second one is your CAMA, and the third one is for those listed entities regulations. So you need to understand those three sources. Now, so let me take you on a journey outside the country now. Let's discuss the history of IFRS. Now, prior to 1975, okay, prior to 2001, IFRS came into effect in 2001. So the first set of IFRS was issued in 2001. But before 2001, every country in the world, they have their own separate accounting rules that they operate. E.g., in Nigeria, we have our own rules known as the SAS. SAS is what we follow in Nigeria, and these SAS are issued by the Statement of Accounting Standard Board. Then in UK, they follow what is known as IAS. It was IAS that they followed in UK. Now, this IAS is known as the International Accounting Standard. So this IAS now is a standard that is being issued by a body known as IASC. So the body is called IASC, that is International Accounting Standard Committee. They are responsible for issuing IAS. Are you with me? So the International Accounting Standard Committee, they are responsible for issuing IAS. That's International Accounting Standard Committee. And this International Accounting Standard Committee, they were established in 1973. Okay, the International Accounting Standard Committee were established in 1973, and the first set of IAS was issued in 1975. Are you with me? So the first set of IAS was issued in 1975. So these guys, between 1975 and 2001, they have been releasing various IAS, okay, up to more than IAS 41. A lot of IAS have been issued. Note that during this time now, IAS is only being followed in the UK because there was no global convergence, there was no global harmonization of financial reporting during in that time. So IAS basically is a UK-based standard. So they follow IAS only in the UK. Okay. So all the IAS that were issued from 1975 up to 2001, they were basically UK standard. Okay. So I've explained the history of IAS and when IAS was first issued. which was 1975. And also, all the interpretation or the ambiguous part of IAS, you can find them in a document known as SIC. That is the Standing Interpretation Committee. So Standing Interpretation Committee, these are the various interpretation of the ambiguous part of IAS. So all the ambiguous part of the IAS are well interpreted in this SIC. So that is Standing Interpretation Committee. That is where you found all the interpretation of all the ambiguous part of what IAS. So from 1973 up to 2001. So hold on, I'm trying to bring out my pen so that you follow very, very well. From 1973, okay, where is my pen? Yeah, this is my pen. So from let me pick red pen. So from 1973 now up to 2001, what we have, like I said, was IAS, right? So from 1973 up to 2001, we have only IAS, and the first set of IAS was issued in 1975. So the first set of IAS was issued in 1975. So we have various IAS that was issued from 1975 to 2001. That is IAS 1 IAS 1 on presentation of financial statements, on IAS 2 on inventory, and the rest like that. So this was basically a UK-based standard, the same way every country in the world also have their own various accounting standard. Now, something now happened, okay, in 2001. So every country in the world now realized that it is time for all the countries to come together and prepare their account following a single set of rules. Simply because if you prepare your account using SAS in Nigeria, and you want to go and transact business in the UK or in China, you need to employ the service of somebody known as an interpreter. So it is that interpreter that will first of all interpret your account from SAS to the standard that is being adopted in the other country you are going to operate. So this thing creates a lot of economic barriers, because the account that is prepared in Nigeria is prepared using local standard. The one prepared in UK is prepared using UK standard. The one prepared in China is prepared using Chinese standard. So there is now need for all the countries to come together and adopt a single set of accounting rules that will be acceptable globally, so that the same way you are treating transaction in Nigeria will not be different from how their transactions are treated in the UK and the rest. So that was what really brought about IFRS. So a body was now constituted in 2001. So that body is known as IASB, International Accounting Standard Board. So they were now established and they replaced the old IASC, right? So the IASB was established in 2001. That is International Accounting Standard Board. So this IASB, they are responsible for issuing IFRS. Please note, IASB, they were established in 2001, and they are responsible for issuing IFRS. Remember, IASC, they used to issue IAS then, but now they have been scrapped. They were now replaced with another body known as what? IASB. So this IASB, they are responsible for issuing IFRS, and the first set of IFRS was issued in 2001. So the first set of IFRS was issued in 2001 by these guys called IASB. So they were responsible for issuing IFRS, and they issued the first set of IFRS in 2001. Okay, so from 2001 now, they stopped issuing IAS, right? They started replacing IAS with IFRS. So as of today, now we have about 17 IFRS. So as they are issuing a new IFRS, they are now deleting the IAS. But now, as of today, there are some IAS that have not been deleted, that they are still relevant with some IFRS. So going forward now, what you'll be having is IFRS 1 to infinity. All the IAS will eventually be scrapped in the future. But as at now, some IAS are still relevant, like IAS 1 on presentation of financial statement, IAS 2 on inventory, IAS 3 has been scrapped, IAS 4 has been scrapped, IAS 5 has been scrapped, IAS 6 has been scrapped. We have IAS 7 on statement of cash flow. So like that. So in the nearest future, there will not longer be IAS again. You will be having IFRS 1 till infinity. So That's just the journey. So note the journey of IFR actually began in 2001 when these old bodies of IASC, they were scrapped. Okay. So that's just the journey of what IFRS. Also, there is a document where you can find all the interpretation of the ambiguous part of IFRS. That document is known as IFRIC, as is IFRIC. That is the interpretation of financial reporting, International Financial Reporting Interpretation Committee. That is IFRIC. That's where you found the interpretation of all IFRS. So if somebody now asks you, what is a complete set of framework that govern IFRS? Please, there are 5 of them. If somebody asks you what is a complete set of the framework, so there are 5. Let me list them now. The first one is the IASB conceptual framework, which we did on Saturday, right? IASB conceptual framework, that's the first one. The second thing you should tell is IFRS. That's the International Financial Reporting Standard. We have about IFRS 1 to about 17 or thereabout now. Then the third one is your IFRIC. That's the interpretation of those IFRS. That's the third one. Interpretation of those IFRS. That's the third one. Then the fourth one is your IAS that have not been deleted. All those IAS that have not been deleted, they are still relevant now. Then the last one is SIC of those IAS that have not been deleted. So these are the 5 set of rules now that we follow, or guidelines that we follow as an accountant. Okay, so that's just the rule. So if you need the clean copy of all those IFRS, I can easily share them with you if you need. So this is just the summary of what I was saying. That prior to 2001, we only have the IAS, and which is interpreted through SIC. But from 2001 to date now, IFRS came on board with IFRIC. Okay, so that's basic things that we have now. So I've explained this now. All right, so yeah, so let's now discuss what is convergence of accounting standards. Look, like I said now, the convergence of accounting standard is a principle whereby all countries globally comes together to adopt a single set of accounting standards. Please, this is a regular ICANN question. What is convergence of accounting standard? What are the advantages and disadvantages of harmonization? These are regular questions of ICANN, okay? I should be able to treat some past questions for you before we end the class today. So convergence is when all the country comes together to adopt a single set of accounting standard that will be used internationally or globally. So this is what is referred to as conversion, which is also described as international harmonization of accounting standards. So with this conversion now, it is very easy to trade, because if I prepare any account in Nigeria, it will be very easy to be interpreted by somebody in the UK, because we are all following the same set of accounting standard. So we are all following the same thing. So note that harmonization is the same thing as convergence. That is the process of adopting a single set of accounting standard globally. Let me admit the person that is there. So that is the same thing as harmonization, the process of adopting a single set of accounting standard globally. So if you know somebody called Nathaniel, please tell the person to probably restart his network, because I've admitted him and he's just there in the lobby forever. You can call him, tell him to please restart his network and join us again. I don't know what to do from here. So convergence, like I said, is the same thing as harmonization, the process of ensuring that all the countries in the world adopt a single set of accounting standard. Now, I can tell you that globally now, most of the countries have adopted IFRS. In fact, the first country to adopt IFRS in Africa is South Africa. South Africa, they are far ahead of us in IFRS. They are the first country to adopt IFRS in Africa. So, but there is a country that are very, very stubborn. Still, they have not adopted IFRS because they are of the opinion that adopting IFRS will distort their operations and everything, which is known as a US. So in US, they are still following their own US GAAP, similar to Canada too, because Canada definitely, whatever US do, they do. So US are still following what is known as a US GAAP. So they have not adopted IFRS in the US. So they are still following their own US GAAP. So hopefully going forward, the IASB and the accounting standard in the US, they will come together and form a single set of accounting standard that will be adopted. But in US, they are not using IFRS, they are using their own US GAAP. GAAP means generally acceptable accounting practice or principle. That's what GAAP is all about. All right, so let's discuss the benefit of this marriage. This harmonization is like a marriage. All of us come together to speak one voice. That is what is known as what harmonization. So let me quickly explain some of these benefits or advantage. Please take note. You need to note down 5 advantage and 5 disadvantage. Don't joke with this harmonization. No. Okay. So what are the advantage? Number one is that investors and analysts of Nigeria statement can make better the comparison between the financial position. This is very easy. So because of this now, it is very easy to compare information because you can easily compare an account prepared in Nigeria with that of UK. You compare them side by side because both of them are prepared using the same set of rule or standard. So that's one of the benefit of harmonization. Easy of comparison. Another one is for international group, it simplified the process of preparing group accounts. You don't need to do series of adjustments because the account itself, you have prepared both entities accounts using the same accounting rules. So it simplifies the process of preparation of what group account for those multinationals that have a group of companies scattered everywhere. Then the third one is that if all entities are using the same framework of financial reporting, management should find it easier to monitor performance. So you can say it aids performance monitoring. Okay, you can easily monitor your performance because both set of accounts are prepared with same rule. Also, it also promotes cross-border trading, right? Harmonization promotes cross-border trading. So you can easily trade. You can be in Nigeria and your company is trading with another company in another country easily, and you are exchanging financial statements, okay? Because both of you are prepared a financial statement following the same set of IFRS. So that's another thing. The other thing is that it also makes it easier for you to assess investors or those that will help you with loan or foreign facilities because of the same practice or rules that you both follows. Then the last one is that it helps to reduce the cost of capital as a result of definitely if you have a lot of fund, if there is too many entities that are willing to give out loan, then the cost of capitals will drop because of that. So these are some of the benefits of what harmonizations, right? So you need to take note of at least 5. So let's look at some of the disadvantage of harmonization. Everything that is good too always have some form of disadvantage. This first one is this may conflict with some of the requirements of your local country. Some countries have a particular set of rules that they follow. So adopting IFRS might have a conflict with their own set of rules. So you need to balance what your country rule is all about versus what the IFRS is talking about. So you need to balance both angles very well. Then the second one is there is something known as some countries may believe that their framework is satisfactory or even superior to IFRS. Example is US. They just don't want to hear anything about IFRS. They prefer what is applicable in their own country. Then we also have language barriers too, cultural differences. These are also different problems too that may be applicable. So that's also a problem that you need to take note: language barrier and cultural barrier. So, like I said earlier on, that most of the entity in the country in the US, at least I can confirm that about 140 out of 150 countries in the world, that which represent 93% have started adopting IFRS in 2016. That is, they make a set of commitment to adopt IFRS. E.g., Nigeria is one of the country that has adopted IFRS in Africa. I told you that in South Africa, they are the first set of countries to adopt IFRS, whereas in the US, they've not started adopting IFRS so far. Then in the Europe, most of the countries that falls under European unions. In fact, once your shares is to be traded on the London Stock Exchange or on any EU stock exchange platform, you must prepare your accounts using the IFRS. So this has started since 2005. So they made it mandatory for themselves that if you want to trade in UK or you want to quote your shares on London listing, you must prepare your accounts following our international financial reporting standards. So that is what is applicable in the US. Now, there is a body called FASB. This FAB is Financial Accounting Standard Board. So this FASB, they are like the regulator in US. Okay, they are like a regulator in US. So FASB, whereas the IASB, they are the regulator for IFRS. FASB are the regulators for the US GAAP. So both of them recently had a meeting and they came up with an agreement. That agreement is known as a no-work agreement. So what is in this no-work agreement is that both of them, both the UK, US, and the IASB, they agree to come together and work together in producing a set of standards that will be acceptable globally so that US too can migrate. So that is what came out from that agreement. So the IASB and the FASB in US both are seriously working to see how both set of standards can be combined together and they produce a single set of standards that will be adaptable or dump on the rest of us, because definitely in Nigeria we don't have any say. It is whatever thing they agree that they will dump on us here. So unfortunately, we don't have any say in Nigeria here. That's the truth. Once they come up with any standard tomorrow, they dump it on us. Okay. Now, one of the major difference between the US GAAP and the IASB, the IFRS, is that in US now, their own standard is rule-based, whereas the IASB is principle-based. In US, their own is rule-based, while the IASB is what? Principle-based. I explained this to you guys last weekend that when we talk about rule-based, under the rule-based, you are expected to follow a certain set of rules, which you cannot deviate from. You follow the rule to the latter. Whereas under the principle base, you are allowed to use your own judgment. It is a little bit flexible. It's flexible. You can use your judgment to come up with a solution. But under rule base, you cannot use your own judgment. You must just follow the rule. If the rule states enter canal, you have to enter that canal compulsorily. That is what the rule base. But under principle base, you have to use your brain. Oh, this is not right. You use your brain. Oh, somebody's, let me admit who is this. Kenny is here. Nathaniel. So that is the difference between the rule base and that is different between rule based and principle based. So there are some advantage of principle based. Let me list out the advantage of principle based. Number one is that this principle based allow use of judgment. So it's a little bit flexible. It allows you to use your judgment to treat the wide range of what transaction. And also under the principle base, it is more difficult to use creative accounting when the approach is based on fundamental principles. So here, you are only following principle, and that principle, we should be able to verify the principle empirically. So it is very difficult to do any window dressing here because you are following a certain you are following a principle which you have to prove to everybody, right? So that is basically those are the advantage of principle based. Then the disadvantage of principle based are, number one, it requires a lot of judgment because you have to bring your own judgment. And sometimes you can introduce a judgment that will be biased just because you want to sell a narrative. You can introduce a judgment that will be biased. So that's one of the disadvantages of principle-based. People introduce all sorts of judgment that may not really show the true and fair view of the financial statement, right? Then the second one is correct approach may not always be obvious and can give the illusion of being insufficiently rigorous. So you can always play the game of principle based to your own advantage. Okay, just try to protect your interests and work towards your advantage. So you can always change the narrative towards that because you are allowed to bring in your own judgment. So you can try to do something that favors you alone, whereas it's not in the interest of the business. So let's discuss for the rule base now. There are some form of advantage and disadvantage. Under the rule base, the first advantage of rule base is it brings certainties to the accounting process. Definitely, it is very certain. You have to follow something. We know where you are going. Everybody knows because you have to follow a laid down rules, and you cannot bring your own initiatives. Then the second one is that it removes the possibility of similar situations being presented differently due to the exercise of different judgments. Because you are allowed to bring your own judgment, it is possible that you can see two different people presenting a same situation in different manners. Okay, so under rule base, that risk will be fully eliminated because everyone is preparing their financial statement following the same set of laid down rules. Okay. Now, the disadvantage of rule-based are as follows. The first one is it allows for manipulation and transaction can be constructed to achieve an artificial effect. Definitely, if they don't allow you to bring in your own, you can just decide to manipulate just to achieve is the result that is desired that you should be able to achieve. Then the second one is that rules cannot anticipate all possible situations, but in an attempt to do so, accounting framework can become very large and complex. So here, rule base is so it's quite difficult for a set of rule to address all problem in the world. So that is why sometimes people will window dress just to achieve the desired results because and also it can give the illusion of being rigorous, definitely, because you are not allowed to bring in your initiative. So definitely the options of the rule being too rigorous, it is always there. So all right, okay. So that's just the from the international perspective. So the basic thing you need to understand under the international perspective, which I've explained, is that you need to understand the definition of convergence and harmonization of accounting standard, then understand the advantage and the disadvantage and try and understand the history of IAS, how it started and how it was now changed to IFRS. The transition from IAS to IFRS, you need to understand process the same way I have explained. So the accounting rules in Nigeria, we've discussed this. We've discussed the source of regulations that they are your IFRS, your Company and Allied Matter Act, and the third one is your listed rules for those listed entities. So NASB, these are quite archaic now, so we don't need to even discuss all this thing again. NASB is no more, but we now have a body known as IFRCN. So this FRCN now, what do they do? So they are like our own IASB. You know, globally we have IASB, but in Nigeria we have FRCN. So FRCN is Financial Reporting Councils of Nigeria. So they were set up to replace the NASB. There is a body called NASB in those days, Nigerian Accounting Standard Board. So this NASB, they were the body issuing the local standard known as SAS. So but now NASB is no more. So they were replaced by FRCN in 2011. So this FRCN, they are now the one that are responsible for implementing IFRS in Nigeria. Remember, FRCN cannot issue standard, but their own is to implement, monitor, and train. Okay, they just implement, monitor, and train, but they cannot write any or issue any standard. They don't have that power. They just implement, monitor, and train in Nigeria. Okay, so that is basic things that the FRC do. So, despite the fact that we have IFRS in Nigeria, you need to know that there are still some local standards that are still much relevant in Nigeria. We have some local standards that we are still following in Nigeria simply because we do not have the corresponding IFRS for those local standards. So those local standards are still very relevant. So examples are SAS 14 on accounting in the petroleum industry downstream. So this is still very relevant now because we do not have any IFRS. The IFRS that we have, I think, is IFRS 6 or so on exploration of mineral resources. Only discuss the cost about the cost, but it does not cover the main content itself in the petroleum industry. So those in the petroleum industry, they are still using the SAS 14, and SAS 17 because there is no corresponding IFRS that address this issue. Then SAS 25 or telecommunication activities too is still applicable for those that are in telecommunication sectors. Likewise, SAS 32 on accounting by not-for-profit organizations. So these standards are still very relevant because we do not have the corresponding IFRS that address all these standards. So these local standards are still relevant in Nigeria to date because there is no IFRS to address the issues they address. Okay, so that's for the existing SAS. All right, so now let me run you through this. So I will run you through all the IFRS and I will tell you those ones that are very examinable here at your level. So definitely IAS 1, they will test you. IAS 2 inventory, you have done this one at your skill level, right? So, but in fact, in my opinion, every standard is examinable here. Because if they don't ask you specific question, if they don't ask you specific question on those standards, they can include question of those standards in another case study. So please don't mind them that they keep saying no to some standard. Everything is quite examinable. The only one that is out of it for us, that don't even bother yourself, don't even waste your time to read, is IAS 29 on hyperinflation. Because as bad as Nigeria is, we are not under hyperinflation, because hyperinflation is when your inflation rate exceeds, I think, 100% or so, then you are in crisis. But Nigeria will not get to that level by God's grace. So there is no hyperinflation in Nigeria. So you can ignore IAS 29 since it is not relevant in Nigeria. Many people are joining the class now. What's happening now by this time? So that is hyperinflation. That's not applicable in Nigeria. So I think we need to move on to the ethics now. Let's discuss ethics. So after discussing the ethics, then we will review some of your past questions. So you will review some past questions and we call it a day. So like I told you, I will not exit 10:15. That's a closing time. Okay, so let's discuss ethics. Now, this ethics is applicable in all your courses, or it's not only in corporate reporting. It is applicable in every paper. There is ethics, even in SFM, there is ethics. All paper, there is ethics, but once one lecturer addresses for you, you can take that for the rest. So you don't need to keep repeating it at every courses. And this is something that you have done before in your audit, right? But let me just run through it fast in 5-10 minutes. Ethics. I believe that you all have an idea of what is ethics. So let's define ethics. So there is no single definition for ethics. Ethics simply means doing the right thing at all time. So I can't really say this is a definition of ethics, but you can just take it as it's just about doing the right thing at all time. It's not just about you obeying the law. You can obey law and still not ethical, right? So when you have the principle of doing the right things at all time, you find yourself. That is what ethics is all about. So this ethics is one of the core principles that is expected from a chartered accountant. It is one of the core principles that is expected from chartered accountant. In fact, I can issue a book called Code of Ethics for Professional Accountants. Please, maybe when you qualify, you can download that book from ICANN website and make sure you read it from time to time. It is very, very important. And don't think because you are honest and you have integrity, you are ethically okay. You can still be doing other things behind the scene. So you must be all-rounder, okay? That is what makes you to be ethically correct. Now, there are some fundamental principles of ethics according to the ICANN Code of Conduct on Ethics. So the first one is integrity. So what is integrity? Integrity simply means you should always say the truth at all time. Do not lie. I'm sure if we install a lie detectors machines now, almost everybody will pass the test. We all must have told one or two lies before in the past, right? So, but going forward, please try and say no more. If you have lied in the past, let that be bygone. Please don't tell lies again. So integrity simply means the process of you trying to do the right thing at all time without telling lies, right? You must always be someone that will be trustworthy. That's integrity. Then objectivity simply means that you should also be able to be objective in all your dealings, okay? Don't try to confuse people or try to manipulate or deceive people. You should always be straightforward and be objective in your dealings with people. Then the third one is professional competence and due care. Yeah. There is nothing like jack of all trades here. You should always undo a task that you know you are professionally sound or competent to do. So if you are given a task and you know you don't have the capacity to do the task, what you should simply do is to resign from that task or withdraw from the task. Don't say you are jack of all trades, you must do everything. Please no. So professional competence and due care is always very important. Then the third one is confidentiality. Now, confidentiality simply means that you should not expose your private data of a client or your company to the third party. That's completely. But know that there recently ICANN released a law, an act known as Nuclear Act. Nuclear Act. That's non-compliance with law and regulation. So that Nuclear Act simply overrule the concept of confidentiality. Because what the Nuclear Act states is that suppose you work with a company now, and that your company, they are continuously violating the law of the land. They are not remitting payee, they are not remitting taxes, they are not remitting pension, they are not doing anything. So according to confidentiality, you should keep quiet and not say anything, right? But what the Nuclear Act now states is that please, you can speak out if the company or the environment you found yourself, they are not complying with the law. The Nuclear Act says you can speak out. And in case you now speak out, the company, they now try to wish on you or sabotage you, then ICANN will now protect you and defend you. Okay, so that is what the Nuclear Act is talking about. So ICANN will defend you, protect you, because in the course of you trying to do the right thing by reporting non-compliance, you are being vindicated or you are being victimized. So ICANN will now defend you. Okay, but please, my people, all this thing I'm saying, they are just for theory. If you know something is very important and life is involved, there is no price for money for life. Please use your brain. No, don't say you must go and talk because there is nuclear art. Nuclear art cannot replace life. That is what I'm telling. I used to tell people. But many people have landed in serious trouble before, found themselves in serious, deep trouble, really. If life is involved, please protect your life first. That's what I will advise you. So you can read more on each of these fundamental principle of ethics. I've just done a summary of everything. Now, there are some threats to those fundamental principles. Even though you know the right things that needs to be done, but still, some threats can impede you from performing those tasks. The first one is self-interest. Threats. These are known as threats to fundamental principle. The first one is self-interest. E.g., you are the accountant of ABC. ABC Nigerian P. I mean, you are the auditor of ABC and Co, right? And you have just secured a job to audit XYZ and Co. And that XYZ and Co, your wife or your girlfriend happens to be the CFO of that company. And you have been appointed as an auditor to go and audit that company. So what it all? You have an investment in a company, you are now been appointed as an auditor to go and audit the company where you have investment. So that is more or less like self-interest. That shows that you already have interest in that company because no matter either your wife was the CFO or you have investment in that company. So what the self-interest stress simply state is that if case you find yourself in such scenario, and definitely whatever you do will not be too objective, you will be subjective. So you should kindly withdraw from the task. That's what this ICANN code says about the self-interest. So kindly you should withdraw from that task. Then the second one is self-review. Now you are the CFO of XYZ now. Then 3 years ago, you are a CFO. Now you have crossover from being a CFO to an auditor. You are now appointed to go and audit the company when you are the CFO of the period that you want to audit. In that case, it's like you are trying to review yourself. So what the code of conduct states is that you should kindly withdraw from that task. Then the third one is advocacy. This one, I'm always at fault. Even personally, I'm always at fault here too. Because sometimes as in my capacity, right? My job is to always defend my company at all time. Even if my company have not done something right, and whenever any thought, let's assume that I have FRS audits now, for example, I have a tax audit with FRS, and I truly know that my companies have not fully complied, maybe with a section of the law. I cannot tell FRS, oh FRS, we have not paid, give us bill. I must always defend my company. I will defend them to the last moment that we have paid, right? So that's an advocacy trait. I'm trying to advocate for my employer. So this one is always a win-win. You are trying to advocate for your employers, right? So we always find ourselves in these scenarios. The another one is familiarity. So when you are familiar with the entities too much, e.g., you are being like, for example, now you guys, now let's assume that most of you work with a particular organization. They now appointed me as the auditor to come and audit the organization. Definitely, most of you, I know you already. So that will be a familiarity threat. I would not want to issue a report that will hurt you guys because we are friends, right? We are colleagues. So that's also, in that case, if I find myself in that kind of situation, what the code states is that I should withdraw. Then the last one is intimidation. Now, you went for a board meeting where you are just appointed as the auditor, and after the meeting, one of the directors now call you behind. Auditor, see that if you issue any bad report, I will kill you or I will deal with you. You know, it is very common for all these big men using the word, I will deal with you. If you find yourself in that kind of situation, the standard ICANN state that you should report to ICANN or report to the nearest authority. Okay, but ladies and gentlemen, I would advise you one-on-one. If you find yourself in this kind of situation, your life first. So kindly withdraw. Okay, I won't advise you to go ahead with the task because if you go ahead with the task, you will likely compromise. So instead of you compromising, it's better to just resign and move on with your life rather than you risking your life. So please, although I can have a department where you can report to and they will take this thing up, but if it involves your life cannot be recalled. You cannot do Control Z or Control V or Control undo. You cannot undo your life. Once it is gone, it is gone. So that's just what you need to understand by ethics, right? There is one more principle that I need to show you. Yeah, this accountant in business and accountant in practice. Note that there are two different things. When we say accountant in business, so these are the accountants that are in paid employment, okay, e.g. CFO, compliance manager, internal audit manager, all those big titles. Those accountants working with a company, right? Working for a company, receiving salary every month. They are the accountants in business. So for this set of accountants, it will take them 10 years to become a fellow of ICANN. Okay, you need to continue working for 10 years before you can be awarded with a fellow. But the second one is accountants in practice. So these accountants in practice, they are those accountants that have a practicing license to operate, right? They like those that work with audit firm. They work with audit firm and the rest. They have the cumulative experience on practicing. So for this set of accountants, their own is just 5 years and they becomes a fellow of ICANN. So that's basically the difference between the accountants in practice and accountants in business. So I'm going to stop here for now. So we've covered what we need to cover under chapter 1 of your pack, right? So when we meet on Saturday, we will take the income tax, then upper week we will conclude the IFRS 8 and the chapter 3. But before we end this class, I have some questions for us to solve case study, right? So let's take those case study now. So the first one I'll be discussing, where did I get this one from? This one is your November. Oh, this is question. Let me check the die. November 2022. Let me zoom it so that you guys can see. So I will just read out the questions for you. Then I'm sure you will know the answer. So then you go and take care of it on your own later on. So this is November 2022. So you know when I told you that this chapter 1 to chapter 5 of your pack, they are like your secret. They are more or less like a bonus for you because I don't joke with them. They come out every diet. So this is like an example of such. So this is November 2022 corporate reporting. So let's check the question. It's always under question. They are always under question 5 to 7. I don't know why they are always under question 5 to 7. Now question 4. No. Hello. Okay. Now look at this question number 4. Now this we have not done it, but I'm going to teach you probably next week or upper week. These are other information in your annual report. So we're going to do this one in about a week or 2 time, right? So let's move on to question 6. So look at question 6 now. Question 6 of 15 marks. Compliance with the fundamental ethical principle may potentially be threatened by a broad range of circumstances. It is expected for professional members to evaluate, identify threats, and put up enough safeguard as appropriate response to such threats. Unless any threat is clearly significant, member must implement safeguard to eliminate the threats or reduce them to an acceptable level so that compliance with the fundamental principle is not compromised. Many threats fall under the following categories: self-interest threat, self-review, advocacy, familiarity, and intimidation. So what do they want to do? So evaluate two circumstances which may give rise to each of the categories of threat enumerated above. Hello, my people. Do you know how you answer this question? The first thing you will do is that each of the threats you will explain. Okay, you will explain self-interest threat, then give two examples. Pam, you are done. Explain self-review threat. Give two examples. You are done. Explain advocacy threat. Give two examples. Explain familiarity threat. Give two examples. Explain intimidation threat. Give two examples. That is all you need to do. And your 10 marks, the 10 marks will be yours easily. So I've just answered this question this evening because I've explained with some examples, right? Then B, recommend two safeguards to eliminate or reduce the threat to an acceptable what? Limit to an acceptable level. So what are those things that you need to do under self-interest, self-review, advocacy, familiarity, intimidation? So just tell them two solutions, all right, that of what you need to do. So I've also explained that too. So with this one now, you should be able to score 13 over 14, 13, 14 out of 15 marks. If you're able to answer it the way I've just explained, you should be able to score 13 to 14 marks here easily without any stress. Okay. Now questions. I think that is all for that diet, right? Now another diet again. I have to May 2022. This is a question. May 2022. So please try and go back to this November 2022 and attempt that question number 6, please. You attempt it and review their own solution so that you understand how they solve it. It's very important, please. Now let's look at question number May 2022 now. There are two questions here that we need to review. Question number 5. So look at the question. Question number 5, May 2022. The debate over principle-based and rule-based accounting standard has increased as a financial accounting standard board and international accounting standard board seek to converge accounting standard for global uniformity. This is exactly what we have just done now, what I've explained to you this evening. So there have been divergent opinions as to whether rule-based standard are superior to principle-based and that principle-based standard pose greater ethical challenge to accountants than rule-based. So A, require what are the major benefits and basic criticism of principle-based standards? Do you know what they want you to do? Explain the advantage and disadvantage of principle-based standards. Simple. That is exactly what you need to do here. And you are done. You can give them like 4 if you can do, or 5 if you can do. Okay? But maximum point you can give, and that's all. Then B, what are the circumstances of transiting from rule-based to principle-based standard? Simple. Okay, so I've explained that when you are changing, it's just probably you want to show a more better presentations of your financial statements. That's number 1. Or number 2, circumstances is that if there is no existing standard that covers such transactions, then you need to apply your own best of judgment principles in treating such transactions. So those are the circumstances that can result into changing from rule-based to principle-based. So if you can just answer that, you should be able to score 14 or 13 over 15. Now, let's look at these other questions now. So you can see there are always about 2 or 3 questions from your chapter 1 to chapter 5 of your pack. Okay, very, very cheap question. No? They are always there. So, okay, so that's how to pass ICANN exam easily. Oh. It's not tough. Oh. Now look at this question number 6. International Financial Reporting Standard, a set of accounting standards, and it is unrealistic to assume that this standard could not replace those based around rules. However, where rules-based system has been in operation, there is likely to be an expansion of ethical challenge for both accountant and auditor that are involved with the financial statement if principle-based approach was adopted. Therefore, regulatory authority needs to ensure ethical practice in order to achieve high quality client assessment. This is drawing attention to the need for closer grade monitoring. Apart from this fact, corporate financial reporting regulation have been in operation before the advance of what IFRS. So require appraise the rationale behind the regulatory framework for corporate reporting. Do you know what they are asking you to do? Why do you need to regulate? Okay. What are the benefits of regulating financial reporting? Okay. Why do you need to regulate? So I will leave that one for you to answer. Okay. Why do you need to regulate? So that's your question there. Then B, analyze in details the various sources of regulations. I've explained that. That was where I started from. What are the sources of regulation? So I will leave this one too for you to answer. So your question, this one is talking about ethics. You can see here now, with what we have done this evening now, we can even write this exam out. This is about 30 marks, right? Section C. We can easily write this exam and score about 25 to 30 here. So easily. All right. So let me stop recording. We are technically done for this evening. I promised to end this class by 10:15, and this is, I want to stop recording now. This is 10 about 07. So let me now listen to for your Q&A question. So the recorded version of